Stock investors took a breather and released recession fears. However, a new trading day poses challenges. The market sentiment today is sensitive to a surprise decision on a cheap trade and speeches by governors of 4 central banks. Last but not least, the Federal Reserve is due to unveil the results of the bank stress test after the opening bell. The benchmark stock indexes perked up yesterday, having snapped a long losing streak. Sentiment improved in the light of macroeconomic reports which confirmed the resilience of the US economy. As a result, recession fears took a back seat in the United States and the stock indexes went up. The Dow Jones climbed by 212 points, or 0.63%. The Nasdaq added 1.65% and the S&P 500 rose by 1.15% to close at 4,378. Wall Street faced a new challenge in the pre-market. Futures on the stock indexes traded mixed, but moved lower before the opening bell. The S&P 500 is expected to trade in the intraday corridor between 4,320 and 4,380 points. The upbeat economic data released yesterday calmed investors' worries about a recession. New US-made durable goods orders increased unexpectedly in May. The same is true about sales of new single-family homes. At the same time, according to a separate report, consumer confidence in the United States improved to almost a 1.5-year high in June. The data gave investors a reason to buy back shares after protracted and a deep correction. Economic statistics showed that the economy remains on a sound footing, but at the same time there are no distortions and a sharp increase in certain segments. Against this background, the Dow Jones Industrial Average broke a 6-day losing streak, while the high-tech Nasdaq approached its best first half-year results in 40 years. Market heavyweights Microsoft, Amazon, Tesla, Nvidia and Apple provided the most support for the S&P. Besides, Meta shares also added around 3% after Citigroup raised its share price target. Snowflake shares jumped by 4.2% after the cloud analytics firm announced a partnership with Nvidia. Shares of Walgreens Boots tumbled by 9.3% as the drugstore chain cut its full-year profit, forecast due to lower demand for tests and vaccines. On a Wednesday, index futures pulled back into the red, with the S&P and the Nasdaq leading the decline. Market sentiment was spoiled by the message that the US is considering the possibility of curbing the export of artificial intelligence chips to China. Macro-driven gains in Wall Street stocks on Tuesday came under severe pressure from renewed tensions between China and the United States. Macro-driven gains in Wall Street stocks on Tuesday came under severe pressure from renewed tensions between China and the United States. Shares of chip makers Nvidia and Advanced Micro Devices tumbled by 4% and 3.1% respectively in a pre-trade after it was reported that the Commerce Department may halt shipments of the company's chips to China as early as July. Shares of semiconductor companies including Intel, Marvell and Qualcomm also fell by more than 1% each. In addition, the ECB forum may influence risk appetite today. Markets are torn between the resilience of the US economy and the possibility that demand will prompt Western central banks to tighten credit a few more notches to bring inflation down to its 2% target. In this context, today the market is alert to keynote speeches by Federal Reserve Chairman Jerome Powell, ECB President Christine Lagarde, Bank of Japan Governor Kazuo Ueda, and the Bank of England Governor Andrew Bailey. All of them will present their news on the future of a global finance today. The prospect of a further tightening by all four countries towards the end of the year could be a cold shower for markets. That unit recently were convinced that the sharp increase in the interest rates over the past 18 months may be partly coming to an end. Apart from the central banks and the disappointment of the tech companies, investors will also be keeping an eye on the bank stocks as the Fed plans to release the results of the 2023 annual stress test of the major banks after the market closes. The results will help determine how much capital banks need to stay healthy and how much they can return to the shareholders through share buybacks and dividends. In addition, individual stocks, Boeing shares provided support for Dow futures. Shares climbed by 0.9%. After the aircraft maker said about 90% of its Chinese aircraft fleet had resumed commercial service as of the end of June. Today, major currency pairs are trading with the opposite dynamics than they did yesterday. The US dollar index rebounded by 0.4% in midday to trade at 102.90. The index is likely to trade in the intraday corridor between 102.5 and 103.20. The greenback weakened yesterday as a series of economic data proved the resilience of the US economy. The euro also put pressure on the dollar following comments by Christine Lagarde. All in all, governors of European central banks confirmed their commitment to the fight against stubborn inflation and signaled more rate hikes ahead. The red-hot US economic data confirmed the strength of the US economy, so there are no signs of a recession. Tomorrow, investors will get to know a weekly update on the US unemployment claims. The PCE price index will be available on a Friday, and today the US dollar might gain ground thanks to Powell's speech and tensions between the US and China. Hence, investors could seek shelter in the safe haven US dollar. Meanwhile, the fundamentals benefit the greenback, and the pound sterling incurred the heaviest losses of 0.85% intraday. The Australian dollar sank by 1.1% against the greenback, and today forex traders are braced for market turbulence. Please keep track of the news because currency pairs might reverse at any time. The Canadian dollar is extending its weakness. It went lower against its American rival, and the USD CAD pair grew by 0.58% intraday to trade at 1.3265. The intraday corridor for the instrument is seen between 1.3210 and 1.3300. The Canadian dollar slipped against the US dollar following Canada's inflation report. The annual CPI slowed down to 3.4% in May and the lowest rate in 2 years from 4.4% in April. This shows the hawkish expectations of a further rate hike by the Bank of Canada. Markets see roughly a 60% chance of a rate hike by the Bank of Canada on July 12, up from a 64% before the data was released. The fall in oil prices is also bearish for the Canadian currency. Crude prices retreated slightly on Wednesday after an industry report on a larger than expected contraction in the US oil inventories. It means a strong demand, but later oil quotes again dependent into the red zone. Brent crude futures lost 0.4% and traded at $71.9 per barrel. US WTI fell by 0.46% to $67.42. This year, the price of a Brent oil has dropped by about 50% as rising interest rates hit investor appetite and China's economic recovery fell short of expectations. So the fundamentals do not suggest beyond oil demand. the crypto market is trading lower in a sync with the other risky assets. Bitcoin displayed its direct correlation to the Nasdaq and the opposite correlation to the US dollar index. The flagship crypto lost 1.5% intraday and sank to 30,100. Popular altcoins went down without any exception. Bitcoin ETF optimism seems to be fizzling now. There is not much fresh news on the market, and the ghost of FTX has resurfaced. The bankrupt company is making efforts to revive its flagship international cryptocurrency exchange. The Wall Street Journal reported on Wednesday, according to the magazine, the company began the process of engaging stakeholders in the reboot of the FTX.com exchange. Meanwhile, the EU on Wednesday proposed to increase competition in the payments sector and give legal support to the digital euro. The idea is to open up the payments market that has long been dominated by the American tandem of Visa and MasterCard. The reforms are aimed at giving fintechs access to the payments infrastructure in the same way as the banks. Data protection will be strengthened. The legal basis for the exchange of information between banks and other payment companies is also becoming clearer to strengthen the sector's ability to fight fraud, the European Union officials said. In addition, the ECB is due to decide in October whether they promote the digital euro. The rules proposed on Wednesday would make it a legal tender, meaning it would need to be accepted as a form of a payment. At the same time, Bitcoin reacted coldly to the news today, and despite the intraday fall, the asset is still consolidating within the trading range of $29,700 and $30,800. Bitcoin may try to recover to this level. So that's all for today. We wish you profitable trading, subscribe to our channel, and see you online tomorrow.